Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Did Mark Zuckerberg and Meta just give a boost to a lot of technology competitors like Apple and Qualcomm? I think that was actually the case this week. Meta open sourced its Llama 2 model with the help of a bunch of other cloud providers, providing a lot of infrastructure to get that model into developers' hands. But at the end of the day, the real value may be in putting a simplified model on devices and moving the inference onto the device instead of having that in the cloud. That's what I want to discuss today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube and check out an event I'm doing on August 18th called Money Collaborative. If you're in the DC area, it's going to be a great chance to talk investments with a lot of smart people. Now, back to Meta, I want to show what the announcement was from Meta and then how some other companies were responding. This is Meta's announcement that it is open sourcing Llama 2. You can see that you can not only use it for research, but also for commercial use. Now, the caveat there is that if you have over 700 million monthly active users, it is not free or open source, but you can make a deal with Meta to have accessibility to that. But the trend here is that Meta is starting to build its models open source, so anybody can use them. It's not behind a paywall like an API, the way that OpenAI's models are. So very different incentives for Meta because they don't have to necessarily make money on the model. They can make money on their existing products, and if improvements at the model by being open source make Meta's products better, then that's great for Meta. But I think the ultimate impact is going to be moving a lot of the inference for artificial intelligence onto devices. So there are two pieces of AI that you need to understand: the model, and that's all the work that companies like Meta and OpenAI are doing. But each time you ask an AI model a question, that's actually called an inference. And that inference typically right now happens in the cloud, and it's relatively expensive. That's why there's a ton of demand for Nvidia chips, because each of these inferences needs to happen in the cloud and it needs a GPU to run it. But it doesn't necessarily need to be in the cloud. We've already seen researchers put models onto devices, and Qualcomm is already saying that it is going to be working to put the Llama 2 model onto flagship smartphones and PCs starting in 2024. So next year, they're already going to have models on device. And I think this is ultimately the future of artificial intelligence, is we're going to have a number of different models. A lot of them are probably going to be open source or free for developers. And then those models are going to end up on devices. So Qualcomm is saying that's going to be its future. Apple could do the same thing, but we also learned this week that Apple has been building its own AI models, and those will likely end up on devices so that something like Siri will be powered by a large language model. So, what does this mean for companies and investors? I think the way that we need to think about it is for every tech company, we need to understand where there's going to be value from artificial intelligence. I think the value of models is going to decline. The model itself, whether you're talking about a language model or an image model, is going to be commoditized long term, because there's going to be at least one company, like Meta in this case, where the incentives are to just open source the model. So the model becomes something that's now free for everybody. So where does the value then ultimately lie? Well, it lies in people building products for that model. So maybe it's a specific use case, like investors. Maybe there's a specific model that's built specifically for reading SEC reports and pulling data from that that you might have questions about. But the other end of the spectrum is going to be companies that are building custom chips and custom devices that have the model built into the device. Qualcomm is an example of a chip maker that can do that. Apple is an example of a handset maker that makes their own chips that can do that. So that's why I think the trend that Meta is moving the AI industry in is actually great for companies like Qualcomm and Apple. It's going to solidify their position and their value in the market, because they're going to be able to take those open source models, modify them maybe a little bit to their use cases, or even develop their own in-house, and then put them on chip and move a lot of those inferences onto the device and off the cloud. I bring up that we need to think about the impact on all kinds of different tech companies, because Nvidia is the one company that this may hurt. Nvidia has had a huge benefit over the past 6 months because it is the GPU power behind not only building the models, but a lot of the inference that happens in the cloud. If we're having inference move onto the device, that actually takes away from demand for specifically for Nvidia's data center GPUs. So That's really the dynamic I'm going to be watching over the next few quarters. What does demand look like for Nvidia devices? What kind of models get open sourced? Who's putting models on device? Because this is clearly a fast moving field, but I think we're starting to see where the end game is going to be. And more of those models on devices is going to benefit a handful of companies. We want to be well positioned for that as investors. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.